Hey there, good morning everybody. Christopher Franks with Texas West Capital. It is just after 11 a.m. Central Standard Time here on Tuesday, the 6th of April, 2021 in beautiful Boerne, Texas here just north of San Antonio. Hope you guys are having a great day and trading safe out there. Bitcoin just doing its thing, kind of just been in this range. And I've continued to warn Discord about that, and I believe I've warned y'all about that last week. Until we get a real break out of that range, it's just up and down, sideways motion. And, if you're trying to trade that, guys, that's going to cause a lot of issues for most people because, again, you've got all that overlapping price action. So you guys, I can say it's on blue in the face, but, you've actually got to make the decision to do it. And what I'm talking about is not taking a trade just because there's a chance. As long as you're doing that, you're going to be continually risking a lot more than you should, which means you're going to lose a lot more than you should, which means it's going to take you a lot longer to get where you want to get. You've got to get off this mindset that you have to be in the market 24/7, that you have to have a trade every day, every week, whatever. At the end of a year, if you're doing it correctly, guys, you should be way ahead. But if you're constantly just trying to be in because either you get bored, or you feel like you're going to miss out, or something silly like that. And yes, it is silly. You find out the longer you're in trading, you find out how silly that is. But we all have to go through whatever it takes for us to get through that and understand that and accept that. But when you figure out how silly that is, then you're like, what the heck was I thinking? It becomes a lot less stressful to trade. So anyway, just some thoughts there. As always, you can join us at howtotradetowin.com. Man, I've still got to do a website update here. We've got well over 70 hours of educational content there on Tier 3. We've got over 20 assets that we do daily and intraday, Forex, equity indexes. We do the crypto indexes as well a couple of times a week. For Tier 3, we do Forex and some cryptos as well. There with the intraday and daily updates there. So, and of course, we've got trade setups, we've got hot takes, we've got chart requests, chart critiques, all that fun stuff, guys. So much to do. You should join us there. Plus, we've got a macroeconomics channel, which is pretty awesome because it helps me help you understand the bigger picture and what's really going on beyond just the charts there. So that way, when somebody tells you that this QE is, printing all this money and it's going to be hyperinflation, you can laugh and go, whatever, and just kind of walk the other way instead of taking it seriously. All right, I see a lot of big accounts out there talking about hyperinflation. Man, I'll tell you what right there, that lets you know their level of economic understanding at that point. So just some stuff to think about there. Yeah, so there's no hyperinflation coming anytime soon, guys. I don't see it. I don't know how that happens. With where we are in the world. There's just, it doesn't make any sense, guys. So anyway, so join us here at howtotradetowin.com. We'd love to have you there, all right, guys? Let me see here. And we'll jump on in here to Bitcoin. I'm going to say hi to everybody. Who's here? Mark's here. What's up, man? First time you ever caught the intro? Well, glad you're here, man. Bill, what's up, buddy? Happy Easter to everybody, by the way. That was this weekend here. So if you do celebrate Easter, happy Easter. If you don't, I hope you had a great weekend anyway. Over here it was kind of with the weather, but it was all right. Could have been a lot worse. Hey there, Oscar. Good to see you. Nevlusian's here. Spiral Architect, Data. Martin, what's going on, Hank? Tell you Ryder checking in. Beer is here. I can't ever say it's a bad time if beer is here, right? Let me see here. LXT, what's up, man? Tao, what's up, man? Tao, man, I love Tao. He's from the other side of the world, like many of our members, and it just, always helps me, keep me grounded and kind of continuing to remember that there is somewhere other than the U.S. in the world. It's been so long since I've traveled, it seems like, but. Man, I love having you guys from all over the world. I get a different look at the charts because, where you live kind of affects how you view the world, right? Your society is different. If you look at Eastern societies versus Western societies, Western societies tend to be more independent. Eastern societies tend to be more intra-dependent, so they're, very much family and group oriented and whatnot. And so it affects the way you view the world, which means it affects the way that you view the charts, which means it affects the way you trade. So, when you're looking at big macro ideas and whatnot, it helps to be reminded of how, other people in other parts of the world kind of view things, because they all make up, this macroeconomic trade in movement and whatnot. So great stuff. Taylor Ryder says hyperinflation may not, but locally it's hard not to notice grocery prices, home prices, etc. Yeah, and again, guys, when we talk about it, it's a great point to bring up there. It's something I've mentioned before. Commodities all spiked there. Lumber went through the roof, and all these things went up there. Copper, went well there. And it's really just when I look at it, it's just a sign of what's going on in terms of this larger cycle. You get toward the top of this larger cycle and everything does well. Bitcoin's up, stocks are up, which means people are buying things. People are moving out of the city, which is partly helped by the pandemic, moving out of the city into the suburbs, new homes being built, all these things. And so everything is going up, right? And then it all kind of doesn't anymore. And that's the idea, all these things shouldn't go up at the same time as they have been. And so, when you see all that, usually that's this overexuberance of the market. And so, to me, it's a warning that larger top is kind of making its way into place, So we'll see how it continues to play out. But, when you've done this a while and you start seeing all these things, all these prices rising at the same time in all these different areas, again, and we're looking at this as the idea of, this everything bubble, this credit bubble. And so everything just kind of, does what it can until it can't possibly do it anymore. And then boom, it all pops and, everything kind of takes a hit after everything's been, just risen to these ridiculous extensions. So yeah. So, part of the reason why I haven't bought anything yet, a home yet, I'm still leasing over here. I could never forgive myself if I was buying at the top. So worst case scenario is things do continue to go up, and you know what? Then it goes up for another 5 or 10 years. I don't see how that happens. It just doesn't make a whole lot of sense right now with the way that things are already overextended. So, but we'll see. We'll see what happens there. Meanwhile, you trade the trend, guys. You trade what's going on. I've talked about that a lot. Sometimes we'll get these new traders in who, are intent to show just how smart they are. And they give you a hard time, if your large macro thesis doesn't play out overnight or in 6 months, But it's because they don't understand cycles. And if you're talking about very large cycles, how long it can take for a 90, 100-year cycle to kind of top out and roll over. And so, it is what it is. Hopefully you guys don't find yourself in that position. It really is, for those of us that trade for a living, that actually really do this, the things that you guys want to do, we just kind of shake our heads and just like, what are we going to do with something like that? And unfortunately, other new traders who come in start to say, oh yeah, that sounds right. Look at them. Yeah, they're right. It's like the blind leading the blind, guys. You got to make sure you aren't a part of that. Because it's just going to cause you a whole bunch of heartache and a lot of lost money, which is what you shouldn't want to be doing, right? Let me see here. Let me kind of catch up with you guys here. Mark says he has a meeting between 1 and 2, and that makes him sad. Makes me sad too, buddy. Hey there, Baker. Good to see you, buddy. Jordan checking in. Peck, is that Peck F. Com there? Howdy from Texas. Hey, good to see you checking in, fellow Texan. Where are you checking in from, man? Marty Johnson, it's going great, buddy. Hopefully it's going well for you as well. I always kind of trip over myself saying something like that. Let's see here. Dead Tease says, agreed, wanting to buy another house, but not going to pay a 20% premium in New Jersey. It's insane. Yeah, housing prices have just really kind of gotten out of touch there, with the way things really are, for sure. Taylor Ryder says, same here on the home purchase, trying to invest trade, so at least my funds are keeping up. but I'm betting on being able to purchase again for below the cost of construction. Yeah. Yeah, I mean, like I said, worst case scenario is somehow it works out where it continues higher. And in that case, whatever. I'll buy now, sell in 5 years when prices are really just beyond stupidly stupid, and then wait for it to go down again. But right now, the last couple years or whatever has not been the time for me to buy. Nothing has happened that invalidates what I've been talking about yet. As a matter of fact, everything that's happening is actually more confirming or validating what I've been talking about. Especially as we talk about all these commodity prices going up, new home prices, all that kind of stuff, everything just kind of going up at once. So yeah, let me see here. Let's see here. David, what's going on? He says, do fundamentals matter if I enter on the hourly or daily chart? For what market are you talking about, David? Are you talking about for cryptocurrencies? Are you talking about for equities? Are you talking about for Forex, the FX market there? Are you talking about for commodities? Hey there, Crypto CERN. Good to see you. Let me see here. Yeah, you guys talking about housing prices now. What I have noticed, I keep track of the higher end home prices and whatnot. And what I've noticed is we've got a lot of the upper end here in the San Antonio and in Austin area, all of a sudden entering the market here the last few months. So we're talking about houses, in the 6 million to 15, 20 million range have started entering, and quite a few of them actually, which makes me, again, it's one of those indicators you kind of look at as, man, we're probably near a top. When you've got the big guys trying to sell their very expensive houses, and they start coming in bunches and bunches, that's usually something going on. They're saying, they're worried that the housing is topping out, and they want to go ahead and get out while they can and make that money and move into something else. So, still watching that as well. Forex and commodities, sure, yeah. And indices, yeah. Fundamentals matter, sure. But, I guess, the fundamentals, I'll be honest with you guys. If you don't know, fundamental trading is a lot harder than technical analysis, on the charts here. Fundamental analysis means, you have to understand things like, PE ratios and CapEx and, all these fun little things. It's a lot more accounting oriented if you want to do it really well. And then it's, taking chances on things. You're kind of guesstimating. You're saying, well, if this is happening here and they're throwing these kind of numbers here and they're expecting this over there and the economy's doing this, then altogether I think we're going to get that, and you've got to do that. Whereas if you're looking at the charts, if you're looking at technical analysis via, say, Elliott Wave or Wyckoff or something like that, you really don't have to know those fundamentals. And you can trade a lot more effectively and actually a lot easier because you don't, constrain yourself to the numbers and making guesses based on those numbers and what may happen. Because, if you're looking at it now, if you're doing it fundamentals, you got to go, okay, well, the Fed says they're not going to raise interest rates until 2024. So where does that put me in case of whatever I'm trying to, trade or invest in? How does that affect me there? And so you do that. And if you go by what the Fed says, then you have to hope they're right. Because if they're wrong, all of a sudden, what you're trying to invest in it looks completely different. And I'll be honest with you guys right now, I wouldn't believe half of what the Fed says. I really wouldn't. The last time they said, what was it, 2000... Oh, man, what was it, 2018 going into 2019, or was it 2019 going into 2020? They had said something like they were going to have 5 more interest rate raises. They had said the summer prior they were going to have 5 more interest rate hikes over the next year and a half. And I said, no, this was the last one. I said, from now on, they're going to go down. And sure enough, over the next 5, they ended up going down. And I see that same thing going on here, except they're saying they're not going to raise them. I think they're going to have to. The Fed's going to try and do things via the yield curve, which means they're going to buy, treasuries to affect, to pull them off the market to affect the interest rate on everything. And that's what they're going to try and do to, control things or to attempt to control things. But I don't think it's going to work. Real interest rates have been rising while they've been saying, oh, no, everything's just fine. And, at some point you have to address the real interest rates. And I don't think they're going to be able to effectively do that too much with just, yield rate control, yield curve control. So, they're right now, they're trying to lower that far end of the yield curve, the outward out there toward 30 years. They're trying to keep that down, but what that's doing is that's putting downward pressure here on these shorter term ones as well. And so recently, the overnight was a negative on the treasuries there. There was a negative interest rate here on the short term, on the front end of the curve. And, all that affects how everything else is priced and how things are going on. And, your banks are your big intermediaries there. And what do the banks think is going to happen? And if the bank's wrong, that creates, this opportunity for this massive squeeze, There's just so many moving parts when you're looking at how money actually comes, how it enters the system here. And a lot of it gets caught up right there, in the repo market. It gets caught up right there with your primary dealers. And it never actually makes it out here, guys, to us. But because it gets caught where it does, it affects asset prices and a few other things. And, again, the idea of QE is to raise asset prices so that way everybody feels like things are doing great, so then everybody starts taking out more loans. Remember, the direct way that money comes out into your and my hands, other than the government giving to you, which, guys, $1,400 for a few people it's not anything. If you thought that was going to create some kind of large inflation, you're mistaken. The way you're going to get that is if everybody starts going to their banks and pulling out loans. Your individuals, your companies, everything. But all that stuff has been dropping, guys. And that is deflationary. Savings have continued to remain very elevated. That is deflationary. If people are paying off their loans, they're sending dollars back into the bank. That is destroying dollars. Those dollars are no longer out here. The only way those dollars come back out here is if more people go in and take out more loans. But we know that less people are taking out loans. Less loans are being made. So the money's going back in to pay down debt and staying in. That is not inflationary. That is deflationary. So, you're going to get these areas of rising prices because of QE and what's gone on. But at the end of the day, the big picture is things appear to be leading to deflationary levels rather than inflationary overall with everything. So, yeah. Let me hear. So, let's see here. Kind of catching up with you guys here. What's going on, JJ? Good to see you here. Errol Quinn, what's up, man? He says, slightly off topic. Some of Scott's recent tweets seem to imply that he's bearish on the DXY, whereas you seem to be bullish. I know you mentioned the 94 resistance is critical to claim before you can be certain, but are you still expecting the dollar to climb? Yes. Yeah. Definitely. There's nothing going on right now. We'll talk about the DXY here in just a bit. But you'll see there's nothing going on there that suggests it should be, heading down to new lows now. It's still susceptible to it. It could still happen, sure. But nothing's happened at this moment that says that that's what should be happening. It hasn't gone through any level that says, oh my gosh, I think we should be more prepared for it to go down than up. Again, Scott and I are two different people, guys. We've got different, timelines and different experiences and whatnot. I've actually, I've got a macroeconomics background. Scott doesn't, but when he's looking at his charts and things that he's looking at, he sees things the way he sees them. And that's okay because, he's not going to, the one thing about Scott is he's not going to sit there and continue trading, when the trend is clearly changed. And so it's not like, oh, he says it's bearish right now, and then he's going to forever hold that no matter what. And that's the one thing, that I want you guys to understand. You're going to have different views of things with people. It's okay. And even if your view doesn't align with someone else's, the key is just to understand at what point is your view going to be invalidated. You have to understand that if you know that, then you can have whatever view you want. The important thing is just to know at what point you say, uncle, and you give up and go, okay, I'm in the wrong direction, need to go the other way. The problem is most traders, especially new traders, they don't ever do that. They hold on to whatever they say forever and ever. And social media makes it so much worse because you guys go out there and you say something publicly, and then you worry about what somebody else is going to say to you if you change your mind. First of all, who cares what they think? Shut up, who cares, guys? Don't worry about it. They are not trading your money, okay? So don't worry about what they're going to say. If that's what's keeping you from changing your mind when things are looking like, when things are telling you need to change your mind, then stop allowing it to control you. You've got to be out there, and you've got to, being a trader means you have to be fluid. Being a trader does not mean you make a prediction, you have a target, and you just hold on to it no matter what. If price does this, let's see here. So if price does this down here, let me kind of just get this down here. And you say, oh man, I've got this target up here, right? But then price does this. You don't have to keep holding this target here. If you've got 3 waves up and you're dropping back down below that second wave, this is done advancing right here. It would be silly to continue holding this up here while price continues to go down. But yet, I see a lot of y'all doing that, and I see a lot of it when I talk to you guys. It's a result of you being vocal on Twitter or something, or on YouTube, and then, feeling like you have to hold it because of, oh my gosh, people are giving me a hard time if I change my mind. If anybody's giving you a hard time because you're changing your mind, because when you look at the charts, it looks different now than it did prior, and there's things going on that make you go, I don't think it's going to do what I thought it was going to do. If you get that, you should be changing your mind, period. You should. And if you're allowing social media, especially people that you don't even know on social media, most of the time with fake names and little animal pictures or cartoon pictures there, and you're letting them dictate to you that you have to hold on to that, you need to get out of trading, because all you're going to do is lose money. You absolutely have to change your mind when the situation changes, when the chart no longer looks like it was, when it looks like it's now going to do something different. You have to be fluid. You have to be changed. You have to be willing to change. So yeah, that's what's going to be different with that there. Scott thankfully doesn't worry about what y'all think about what he's trading, because he's trading him, And so he knows where he's looking to, be invalidated. He knows where he's looking for validation. And, that's one thing that you guys have to do as well. All right? David, what's going on, man? He says, I like how zoomed out you are. I learned recently that I focused too much in the present. How zoomed out my charts are. Well, I'm zoomed out too. And that's the easiest thing, guys. When you're a new trader, you often come in on the short end of the near term of the trade of the chart, and you try and trade that, and then you get confused when price does something different. But if you zoom out a few hours, you go, oh, well, clearly it was going to do what it's doing now. I was just too zoomed in to see that. I couldn't see that because the chart was too zoomed in. So yeah, you should always start zoomed out at like the daily and just kind of figure out from there and work your way in, guys. Figure out what the bigger trend is, because your small term, your hourly or something, may have a local counter trend rally or a counter trend, decline that's going on in terms of the bigger trend. But you've got to know where that bigger trend is, so you can get an understanding that local trend may just be counter at the moment, and it'll continue with the bigger trend. What about corporate loans? Let's see here. Bill says, if negative interest rates kick in, does that mean retail accounts have to pay the banks for holding their money? That's what it would mean. If your central bank goes to negative interest rates, you will have to pay the bank to hold your money. And the idea, why would they do that? You say, well, they would do that because the idea is, rather than pay somebody to hold your money, you're going to go out there and spend it. And that's what they need. Remember, we're in debt-based economies here. We're based on debt, which means we need inflation to continue to rise. So that way we're paying off today's debt with tomorrow's cheaper dollars. And the only way you're going to get that inflation is if people are out there taking out loans and spending money. You get all that money continuing to transact out there. If you don't have that, you're not going to get that inflation. So the zero interest rates are an encouragement to get you to spend money, which kind of sucks, doesn't it? I mean, if you don't want to spend money, now you're going to have to waste money having the bank hold your money. If you look at it that way. So yeah. Let me see here. Oh, guys, let me catch up with you guys here. Hey there, Crypto Girl. Good to see you. Let me see here. Let's see here. I'm Deuce says it's a clear ABC up until March 31st. Why is your ABC 335? If it's just a regular ABC, it should be a 535. Yeah. Your B wave is 3. The only way you're going to have a 335 is if you have a flat. So yeah. Oh, you got your invalidation level a little bit lower than what I'm looking for, Hank, huh? 94.23.2. I'm still looking at 94.72 level, where my wave 4 is on that. What's going on, Gerardo? Good to see you, buddy. Let's see here. CT means crypto Twitter. Oh, he told you there. Okay. Excuse me, I had to give me something to drink there. All right, so let's go and look at where we're at here. We'll look at Bitcoin, and then we'll jump over to the DXY. But Bitcoin here. So we had a couple of different counts we were looking at. The continued decline overnight here. I've taken out my alternate count. I think we've got a 1-2 in play here with wave C still playing out. Price is currently trying to find support here on the 1 hour pivot. But if we can lose that pivot, that should get us at least down here, toward this 50% retracement around 55,216. The S1 pivot right there is just a bit higher at 55,415 or so, 420. So kind of this area is where I'm looking at. You can see that also would find support here on this ascending channel. So, it would be a good confluence area. But if it does continue to go down through there, I think if it goes down through the S1, I think we're probably looking down here at the S2 where the 78.6 is. Right here around 52.473. But right now I'm looking for just to get down here around that S1 area and then kind of head up. And if it does, that gives us a minimum wave 3 up here at about 70,800. And then that would give us a minimum wave 5 at 74,500. And that's just off of this local count right here, guys. So, as you look at this here. Now, just because we've got a bullish count on here doesn't mean it can't be bearish and happening further down. It's just right now we're kind of leaning toward the side of the trend here, heading up. But if you remember, I think it was last week when I drew these right here, these on the daily, I drew these curves here. And so this one, kind of comes over the resistance here. And then I just made a copy of it and put it down here under support. And remember, it hit the support here, this support right in here, even though it dipped down, but that area there and support here. And it's just this exact same curve that we had up here. And so what it shows is that, that widening to consolidation in this area here. And I told you that because of this, whether we get a breakdown or a breakout, we should have a pretty decent move because of this, how price has consolidated here as it's come in from the beginning of the year. 4 months in now, it's continued to consolidate. It gets shorter and shorter here. And so when you have something that consolidates, the longer it consolidates, the larger the move is going to be out of that consolidation when it happens. So I think that's the bigger picture right there. If we break down below this swing low over here at about 50,450, I think that'll signal a pretty good move down. But if we break out through the top here, then, we've got this pretty good move up here set up as well. And so right now we're going with the potential move to the upside. But at the end of the day, guys, remember, we still have not, advanced above this all-time high here. It's 61,724 and 60 cents on Kraken. So as long as we remain below that, price is still susceptible to heading lower down. Esteban, what's up, buddy? Good to see you checking in. Let's see here. So, yeah, a couple of great opportunities here. Again, I think I want to see us lose this pivot. So one more drop down to that pivot should probably do it. And then, of course, the swing lows here. But I think we're headed down toward that 50% level at least on that. This would kind of give us this 5 waves up. Still having this wave 4 as a flat here. And then, it came out to this, just a kind of an ending diagonal here. 1, 2, 3, 4, 5 here to finish that out. So yeah, that's what I'm kind of looking at there. We jump on over here to the DXY. DXY had a couple of crazy wicks here yesterday, and I think that was around the same time that the ruble had a crazy wick as well. So kind of interesting goings-ons here. This would be a lot of demand over supply here until it hit this previous area here, this resistance here, in which case it tapped and took out those orders, kind of sent it back a little bit lower here. And at this point, I think we're potentially about ready to finish this up here near this 61.8 retracement. As you can see here, we've got, and I don't know why it's not showing up here. I'm going to reset this here for a minute. We've got some bullish divergence there showing up on the, well, I guess not. Did I have on the 4 hour? I guess not. Okay, so we'll talk about the 1 hour here. So we've got bullish divergence showing up here on the 1 hour. And while it's doing that, we do have Stochastic RSI here. Not quite bottomed out, but low here, potentially trying to cross and oversold. So there might be a little bit of room for it to come down further. And then if we jump out here to the 4 hour has almost dipped down into oversold here. And of course, it's curling back down in here, coming back into oversold on Stochastic RSI. So again, could see that definitely head back a little bit lower here before heading up here. Now, if I'm zooming out here, we've talked about a couple of different possibilities here. Right now, I'm looking at this as a 1, 2, 1, 2. But there, I did talk about the possibility this could be a 1, 2, 3, 4, 5 as a leading diagonal as well. But ultimately, again, I said it's still vulnerable to coming down below that January low until it gets above this point here. If it gets above this 94.742, this wave circle 4, numeral 4 here, if it can get above that, that should signal that this is done now and that this is the low here. So that's what we're watching at right now to see if that works. If we're looking at it here, I struggle a little bit to get a really clean count either way here, whether it's bullish or bearish. But again, things we've talked about usually in the currency markets, the dollar reverses in January. And that's what's happened potentially here. And of course, if we look at the other charts on here, again, kind of looking at this, we'll just zoom out here a bit, at the euro here. Let me kind of get this off. I've got this as a 1, 2, and maybe a 1, 2 finishing up right now. What I'm looking at here, everything else, there's a couple of different counts this can be. And this could be, a 1, 2, 3, 4, 5 as well. This could be a leading diagonal as well. Remember, the euro most often is going to mirror the DXY. Not 100% of the time, but most often it is, because it is basically 58% of that weighted basket that gives the DXY its value, right? So most of the time, you're going to notice that, the DXY and the, what's it called there? The euro are mirror opposites. See that? This one here is the DXY. This one here is the euro. What I'm interested at the moment here is this pivot. If we can get a rejection at this pivot right here, this daily pivot where we're at, that would most definitely be bearish. Just no counts or anything else out of the way, just trading pivots. If you're dropping through here between the pivot and the S1 and you move up and you get rejected that pivot and it comes back down, yeah, you're looking at least at the S1, if not the S2, at least. And in this case right here, this would end up as a WXY correction here, which means, again, we've got multiple different ways we can look at that count. And until we potentially see a rejection here and some movement down below the swing low, then we can start maybe kind of weeding out a few different possibilities. But right now, again, this is what I'm interested in on the daily here. Do we get above and stay above the pivot? As long as we get rejected there, I mean, that just continues to open up the move further down, in those more bearish counts. I think do you play there. Now, locally here, I've got some things marked on here, but locally, and let me get back to the hour here. There is a possible, I think this is a Head and Shoulders that printed here. I'm not a complete fan of, the Head and Shoulders pattern, but in this case, there's a good move up through it. You've got expanding volume coming off the low of the right shoulder. This is what you want to see. You want to see expansion of volume, and you want to see expanding candle spreads. So large candle spreads, expanding volume coming off that shoulder there as it breaks through the neckline. So if that's correct, then, we've got a pattern target up here of around 1.18655. And like I said, that gives us a possible ABC as a W, ABC as an X, and then ABC as a Y. As far as that ABC as a Y goes, A, B, and then you've got this 1, 2, potentially 3, 4, and 5 finishing up here on that wave C of Y. So what we need to see then is we need to see this drop below this swing low here at 1.17952 to kind of say, okay, that's the first clue that the top's probably in. And if we can decline below wave X down here at 1.1738 in that area, if we can get below that, that takes us also below the 1 hour, 4 hour pivot here. That should tell us, hey, we're headed down now. And in that case, we've got a minimum target down here of this green box here, about 1.1656 to 1.16632. So it's basically your H1, S2 pivot to your EQ of this blue demand structure right there. That's my initial target. But again, it depends on how we count this coming down. This is with the older count I had, which said that this was potentially, 1, 2, 3, 4 here, and then a 5 down. So like a leading diagonal here. But if this is a 1 and this is a 2, and this 2, finishes out around this 38.2, that's going to send us a big move down for a wave 3. In that case, we'll be looking for our wave 3 here of, let me see here. Did I even get that right? Let me see. 1, 2, 3, 4, 5. Nope, I don't even have that right. This should be up here. There we go. So maybe not even get to 38.2. Though if it does, if it gets this 38.2 up here, it takes us right here, 1.191, right up there around this high volume node. And that'd be, that would be definitely a decent area to expect to get a rejection at. But if we do it from our pattern target there, that would give us that wave 3 down here at about 1.09934. If it goes up further there toward this high volume node, maybe just above the 38.2, it's a little bit shorter, 1.10548, kind of getting on that. But again, there's nothing going on at the moment here that screams this should be, that this is just corrective and should be heading up. It's gonna have to make some moves up higher to really kind of get that. Really, what you kind of need is this move above this high volume node up here. So you need this move above 1.215 or whatever. this kind of area up here to really kind of say, okay, maybe this is a 4 and we've got a 5 still to go. But as long as we're well down here, especially at this high volume node, in this area of congestion here, as long as we're in here, I mean, there's nothing here screaming that needs to go up at the moment. Let me see here. Dear God, good to see you checking in. Let me see here. Hey there, Brian Riley. Good to check you out. Good to see you checking in, whatever. So anyway, again, you look at this. If you get here, again, the second largest weighted pair there in the DXY is the USD yen. So let me find out that USD yen here. I've got that chart. And so right now with that, see if I can put it over here real quick. There we go. So the USD yen here, again, looking at it's remaining above the daily pivot at the moment. And as long as it remains above that daily pivot, we should be good to go. Zooming out to the daily here. I mean, this is that strong move up right now. And so if we get a bounce here, which is basically, again, that large channel resistance here from back over here in December of 16, that's all we're testing right now. That's where we're at on the low right here. And so if we get the bounce up off there, again, that doesn't make sense, to think that price is going to go down lower. And so, if we're looking at that, again, this would be another clue that the DXY is potentially bottomed. Another thing you guys can look at is, let me see here. I don't know, a lot of people are interested in the cable, especially versus the dollar. So if you look at the Great British Pound versus the dollar here, we've got a couple of different potential scenarios. We've got a possible leading diagonal here, but as deep as this is, I'm thinking it's better suited as a 1-2, 1-2. But right now I'm leaving this as is for now. All we need for the cable to do is drop here below this 1 hour pivot, and that should signal that it's headed down there. But especially if it gets below wave X here at 1.37094, that should set up the move down. If this is a 1-2, 1-2, then you would be looking for the 3 here to get down around here at 1.33808, minimum. And that's just the interior 3. That's 1-2 and then 1-2 3. So this 1-2 would have a minimum wave 3 down here of about 1.32536. Minimum. So, what we're looking for right now is just to break down below the H1 pivot here. And then beyond that, below this wave X swing low at 1.37094. But again, something else that would continue to add to the idea that the dollar may be bottomed out there and reversed. But you can do that with the whole. You can look at the USD against the Swissy and a few others as well, and it's just it's all leading the same way at the moment. They're all kind of doing that same thing. So yeah. Why is the Great British Pound called the cable? You know what? I think I knew that at one point. I honestly don't even know at the moment. Let me see here. Okay, there's Hank's interpretation right there. What he says why it is. So yeah, I don't know that I knew that. I thought I may have known that at one time, but man, I haven't ever thought about that forever and a day, it seems like. So good times, right? Let me see here. Isn't the cable always the USD Great British Pound? No. No, actually, most of the time it's the Great British Pound against USD there. Yeah. Let me see here. You're looking at the Aussie dollar against the Swissy. How do you feel about that pair? I don't know. I haven't looked. Let me see here. Let me do this. Let's make a copy. Let's pair Swissy. Change the date on that. Let's see here. Let's see here. All right. Daily, where are we at? Oh, you got consolidation on the daily. Let's see here. I mean, my first thought, if I'm looking at this, it looks like it's an ABC up. So probably ABC down, ABC up. This could be a triangle playing out here. That's my first thought. And if it is, this might be an A, B, C here. And then an A, B, C there. So it could be like A, B, C, D, E. I mean, it could be potentially done at the moment here. Let me see what I can find here. A, B, C, D, E. Get rid of those waves there. Does it make sense the rest of the way here? 1, 2, 3, 4, 5. Okay. So I mean, that's a pretty short. That would be a pretty short. That wouldn't be a 3 there. Let's kind of zoom out here a bit. Let's see here. I mean, that's a pretty good break out of that channel right there. It consolidated before, pulled back, and punched out. As far as the weekly goes, hitting that R1 pivot. Let me see here. But that weekly, I mean, it's overbought here and then dropping out of overbought there on the Stoke RSI. See what the monthly looks like. Yeah, monthly's up there. It's got more room there on this on the RSI though. Now, as far as bullishness goes, this high volume low here, this spike of volume on that low on the monthly, and then that demand tail right there. I mean, to me, that says this is probably a bottom macro-wise here. Let me see here. Yeah, let's see what this retracement is here. That might be... That's almost the 90%. So, you know, I can see an A, B, C down and then a B, C up here. So get an A and a B as a flat, and then working on a C here. Yeah, I mean, from a macro perspective, I like this bottom down here. See, and that fits really nice into that into this channel here. right there. And then, like I said, on that lower time frame, we've got this breakout down here, which was well formed based on the fact that you had this move up to it, this pullback and consolidation right here, drop back and then break on through. So that's a pretty good move right there. So whoops. Let me see here. Not quite. All right. So this cannot be a if this is going to be an ABC and this is going to be an ABC, as far as a C goes, we need 5 down. And this, God dog it, I keep grabbing the wrong one there. You know, if this is a 1, 2, 3, 4, 5 is a 1, and then a 2, and then 1, 2, 3, 4, 5 is a 3, and a 4, and a 5, this isn't going to work because wave 3 here is the shortest. So if you measure out wave 3 here, or what you think would be wave 3, you put it up to what you think here is wave 1, you can see that wave 1 here ends below, you know, further than the 100%. So it's telling us it's larger than wave 3. And of course, if we look at wave 5 then, or what we think is wave 5, we can see that it goes beyond the 100% too. So as I continue to talk about, when you're looking at when you're looking at validation and, invalidation levels, those are extremely important when you trade, because this looks like it could be, 5 down, but when you go there and you actually measure it out, and you know that wave 3 can never be the shortest of waves 1, 3, and 5, you know this is not a 1, 2, 3, 4, 5, because 1 and 5 are longer than wave 3. That makes wave 3 the shortest. So we know that isn't valid there. Let me see here. So yeah, you're going to watch that. Now, what I would watch, just coming from, a pivots background, again, originally, we've moved in here between the pivot and the R1. What I'm interested to see is, do we get this I would expect a rejection in this pivot area. And if we want to look at these longer term pictures, we want to see, does this drop below the pivot? If it gets rejected the R1 and drops below the pivot, then we should be looking for a lower low here. Macro should be looking for a lower low. Right now, I mean, if we go and measure this out right now this is only 3 waves up. So initially, this could be just an ABC. So, but wave C here will not equal wave A until it gets up here to 0.777. And we usually look for wave C, as a general first target to equal wave A. But shorter term, so shorter term here, I would just look to see if this if a triangle plays out here. So with this drop down, again, I was looking at, there's a possibility you could see this maybe as a 1, A, B, see as a 2, A, B, C as a, I say 2, but a B, a C, 4, and then, potentially this E right here. So here's a possible triangle. And so if this triangle is going to be legitimate, then what we need to see is that price cannot drop below this wave E right here. If it drops below this wave E, then I'm thinking we could potentially have something more like this here. So, every one of these should be ABCs. So, when you get here, you're looking at A, B, and then maybe even potentially a C down here. like that. And I know the degrees are off. I'm just drawing this real quick for you. But if price continues down below wave A here, then yeah, the triangle itself is completely, you know, not correct here. So yeah, first thing is to see if it drops down below here. If it does, then you want to look lower down. Usually, you know, we look for these interior waves of a triangle to reach the 61.8 of the previous wave. So this is wave B right here. So the 61.8 is right here. See, it hits that exactly. But, you know, it can go further. So if it goes further, we'd look for the 78 here. 78.6, just like we'd normally look for waves. And see if we can get a reversal out of there. And then, of course, you know, we'd look for, you know, a D and then an E kind of thing before it breaks out. But right now, it's just consolidating. You got a high, a low, lower high, higher low, potentially lower high and higher low again as it's doing that there. Yeah, so that's what I would watch out for. To me, that's what makes the most sense at the moment here locally, just kind of looking at it real quick. Those bigger pictures, you know, again, if you're looking at the weekly or something like that, look for a rejection around that R1 pivot. If you get a rejection there, then you look to see if you can get a bounce around the pivot. And if you can get that reversal off the pivot, then you should be good to go for further up. But, you know, if it continues down below the pivot, then you're probably going to make a new lower low overall. If instead of getting rejected the R1 pivot, if it continues up through it and continues pushing up through it, then that says that, you know, it's pretty bullish because it moved in between the pivot and the R1 and then it continued up through the R1. That's a pretty bullish look, you know, and I'd be overall looking at a longer time frame, looking for further upside for the Aussie against the Swissy there. So, yeah. Let me see here. S&P, let's see here. Let me get that pulled up here real quick. Let's see here. So S&P continuing to do this push up here. So at this point, you know, we were looking at it potentially being a ending diagonal here. I'm going to have to come back in here when I've got a little bit of time and go back over this count. What we're looking at right here. This could be wave 3 here. Unless, from right around this area, unless we see a real strong drop back down below this this wedge resistance here, you know, coming down back below it, I think we'd have to look at this maybe like a 1, 2, and then potentially a 1, 2, 3, 4, 5 still coming up here. Still getting on that push up there. So, yeah, you know, we're here in the 4 hour, you know, we're up here well overbought. Stochc RSI has dropped down just below neutral here. A little bit bearish there. But daily, yeah, see, daily's got us over here just about to pop into overbought on this on the RSI. And Stochc RSI is topped out there right now. Let's see what we got here. So yeah, right here we're sitting here at the R1. You know, we could see that R2 up there at 41.53. Would be that next target if we continue pushing up from here. What did I say? 41.53, 41.55. Yeah, right about there. Yeah, that would get us right in between the R3 and R4 pivots here on the 4 hour, right about here. So we can see it push up a little bit further to the R4 at least. But, you know, again, if you're getting up to the R4, you're usually running through, you know, if you're getting up right beyond the R3, you're usually running all the way up through the R5. So, you know, as long as we continue up through that R3, I would definitely keep this target in mind, this 42, 41 kind of area up here on that. We are definitely getting a significant drop in volume as we've risen up here, though. As a matter of fact, we had volume on this decline right here, and again on this right here. It's dropped off since then. We had lower volume at the top here, and then we picked up volume on the bottom. So again, you know, as you're looking at that, you're not getting a lot of selling at the top, but you're getting a lot of buying at the bottom. So, as long as your bottom continues to, get your spikes of volume, it's providing support. You're not getting much of volume at the tops here, which means there's not a lot of selling going on, which means demand showing up, which means prices generally headed higher, at least within that time frame. And then, of course, this is right at the beginning of the pandemic down there when we had this move up. So, yeah, I mean, again, we'll just continue to watch that as it's making its little way up there. Let me see here. You see how you had this volume up here at the top here? You had this volume. That's what you want to look for here for a potential reversal. Again, you had volume kind of here toward the bottom. But then when you got to this point, that's where you had your volume kicking in. You had a lot of selling kicking in right here. And then, your volume dropped off. It kind of picked up a little bit here and dropped off as it got toward the bottom. Picked up again. No real spike in volume, kind of this average level here. Drops down again. Volume spikes up. So demand picking up right there. You've got higher lows. You've got higher lows, lower lows here. So hidden bullish divergence. Coming out here on the 4 hour on this big picture here. Sending it up. And like I said, since then, basically you're getting these demand spikes. No real supply spikes, though, yet. So as long as you're still getting these at the bottom and nothing at the top, volume-wise, I think you can be pretty secure in continued upside. But once you see that volume come in at the top, again, similar to what you see over here, be wary of that. That's when you go, okay, at least a temporary top of some sort is in at that point, at least. So, yeah. Let me see here. We check out gold here real quick. What's going on with gold? All right, gold's hit my initial target, which is this green box right here. I'm looking at an expanded flat for a wave 4. If it continues up through this green box, which is basically, okay, it is that blue number there. It's 1744 to 1749. So basically, if it continues up through 1750, I'm looking up here around the daily R1 pivot right here at about 1755 or so. Oh, I guess 1757 or so. Right there as a possible reversal on that. Wave 1 is right there at 1784.60. So, I mean, ultimately price would be expected to turn down prior to that as a wave 4. So if it continues up through that, then maybe we'll have to look at the count a little bit differently. But right now, I've got this as a 1, 2, and then 1, 2, working on 3 here. Coming out of that. Remember, bigger picture, what I've got here for gold, what most people don't like, is this idea that we've got an expanded flat playing out here. So you have your WXY, and then you have your WXY, XZ, and then, or some other account that you can throw in there. There's a couple of different ways you can look at that. But basically that would have wave C coming down at least to this $1,000 area, the top of this, let me pull it out here, this range, just in here, and potentially down here around 838. But I mean, even if you're not that bearish on it, I think you should still probably expect it to get down here around this high volume node at about 1280 or so, 1300 area right here. Everything else aside, again, we've fallen through the pivot. So if you're trading pivots, that usually means you should expect price to go to the S1 pivot at least. 1533. So I've given you some things to look at there as far as where your targets could potentially be and all that. Yeah, again, I mean, even if you want to look at this as an ABC playing out here, you can go 1, 2, 3, 4, 5 as I have it, which is the leading diagonal. And then you've got, so that would be your A, and then you've got your B here. And then, of course, as we zoom in, let me get back down there to the daily. As you zoom in, you've got all this overlapping here, which again, potentially a 1, 2, 1, 2. 3, 4, 5 gives us a 1, 2, 3, 4, 5. And you start looking down toward, again, that 1533 area at least on that. Let's see here. If you're still into silver, which I haven't heard a lot of people really talking about silver anymore since it just continued down when they thought it was going to continue up, way back up over here. I've got this right now coming off as a 1, 2, 1, 2 again. And so now we're working on wave 3 here. So wave 2 of 3. With that here, we've just gone above the 50% level. We're coming up to the R1 on the 4 hour, which is right there around $25.48.5. Right now it's right here at the high volume node at the moment here. But again, that, if it continues up here, we're looking at the R1 pivot is where I'm looking at. Now, it could continue on up here. If it's going to continue up through all this area, I'm looking at this high volume node around the 78.6, which would be 26.1. And again, that would make it solid, wave 2. But then we'd be looking for that reversal back down on it. For right now, as long as this channel holds, I become more interested in some downside and potential reversal happening if this channel support fails, if price falls through that channel support. To me, that's the first clue that the top may be in. Then you need to see a drop here below the pivot, and really below this swing low here at about $24.27. If you're getting down below that, you should be looking for further down here, potentially, down toward $21.23 for this wave 3 kind of area. Might be a little bit above that though, but it'll be headed down that way. And that would only be, again, the way I have it here, wave 3 of wave circle 3 of wave numeral Roman numeral 3. So it'd be 3 of 3 of 3. So if that's happening, you should expect a good move down with that, because it's the third wave of the third wave of the third wave. So that's when everybody goes, oh, they're all on board at that point, kind of jumping in on it. But if you jump, but if it ends up above this wave 2 up here, that would invalidate this local count. We'd have to figure out what may be going on here. So if it jumps above 26.74, we'd have to take a look at this, go, okay, well, maybe, excuse me, sorry about that. Maybe this is a 1, 2, 3, 4, 5 as a diagonal. But again, the big problem with that is this right here. Well, I don't know. Would that be a problem? 3, 1, 2, 3. With this being a 1, 2, 3, maybe in a 1, 2, 3 up here, again, depending on how you look at this, if you want to be more bullish on this, this could be potentially a flat, in which case you're looking for 5 waves down. And that could be an ending diagonal as long as there are ABCs. ABC for 1, ABC for 2, ABC for 3, ABC for 4, and ABC for 5. So, I mean, if you're bullish, there would be your hope of what's going on there, I think. But while you remain below that wave 2 up there, your bias should be to the downside overall. Just wait for it to give you some confirmation before you short. There's no reason to jump into any trades early, guys. Stop being worried that you're going to miss out or that you're bored or something like that. Those are not reasons to enter a trade. Those are reasons not to enter a trade. All right? So 4 touches minimum for a proper channel? Yeah. You want to see it. They're 4 alternating touches. So, again, with your channels, I talk about this often. The best channel you can get, the channel that'll work out most likely the way you're thinking it will, if you're thinking about them correctly, is something like this. 4 touches, okay? 4 alternating touches of support, resistance, going up there. It's coming down through here, so resistance, support, okay? That is a solid pattern right there. I'll get questions from people, and they'll say, well, how does this look for channel? And they'll do something like this. It's something like this. And you don't have those 4 alternating touches. So the channel itself, as far as it being a pattern, is diminished because it derives its strength from those alternating touches. So when you have consolidation along a trend line of that channel, it usually indicates that it's a channel in terms of the local trend, but it's not the channel you're looking for that when you have a breakout or a breakdown, you're feeling like, yeah, that's definitely going in that direction. If you get a breakout or a breakdown of this one, it may only be a little bit of a move before it comes back. So it becomes a bear trap or a bull trap. But if you've got, if you've got your channels where they're solidly moving between 4 alternate touches at least, 1, 2 of support and resistance, just strong movements between the channels, support and resistance like this, no sputtering, strong movements, then if you get a breakdown of that channel support, you can be pretty sure, nothing's guaranteed, but you can be pretty sure that that's a reversal, that this was the top and we're reversing heading down. Or if you're breaking out through the top, that this upward trend's got some legs on it now. So that's usually what I want to look for if I'm looking for a pattern target based on a channel. On your not so great channel example there, what if the EQ seems really significant even when it's not ranging perfectly through the whole range? Well, yeah, you're still going to treat your EQ like resistance or support depending on if price is below or above it. Yeah, just as you would the support and resistance levels of the channel. But if it's your EQ is your minor support resistance level, whereas your channel support and resistance are your major levels. But you should expect, in either case, you should expect price to kind of adhere to that EQ. Either, it works as resistance or price pops through it and it comes back and tests it as support. So yeah. It doesn't make the not so great channel any better. No. If you're looking at a channel, and these are great, some of my favorite trades, guys, are these right here where you have these significant levels. And most of the time where you'll see it is like on, I don't know, maybe a wave 2. So your wave 2 will go like A, B, C. And so then you have this, this pretty great channel playing out here, right? Let's go and pull this back up here. And what actually happens here, again, as I mentioned on the other one, when you get to this area, you might get a bit of, let me see if I draw it here instead. So you get this resistance support, resistance support. And then often what you'll do is you'll get a move up here, and then you get a pullback. Sometimes it'll go to the EQ, sometimes just a little bit of a pullback here. But then it'll bust through on some good volume there and head out. And, this is what you want to see. Because all of a sudden you can just grab your price tool here, and you measure the largest part of that the channel there, and you put it right there where it breaks out, and you go, okay, well, my pattern target is now here. And almost practically all the time, your pattern target is going to lead you right around the top of the range, which makes all the sense in the world because coming out of this, if you're coming out of this, again, if you're looking at this, this would be your larger 1, 2, right? And so then this interior one, usually, 5 waves up, will usually end right around this area. So then you get that. So, when you're doing your Elliott wave, your first subwave here, I know it's only 3 waves. I can draw it here. 1, 2, 3, 4, 5 there. So when it comes out of there, your first subwave of your third wave there usually ends right around where wave 1 ends. A little bit before, a little bit after, most of the time. Sometimes it'll sail on through it. Most of the time it'll end right around there. So it makes sense that most often your pattern target will actually lead you. Now this one's kind of short here, but usually it'll lead you up into this area right around where wave 1 ends. But you'll usually see a solid 4 alternating touches there before it breaks out. And usually you'll have a push up into it, a pull back, and then a thrust out. So this thrust here is usually, it's usually a 1, 2, and your push out is your third wave. Pulls back for your fourth, and then your fifth is up. So, yeah. Just some kind of thoughts, when you're using Elliott Wave on there. Most people are just like, oh, just count this wave coming out, and they don't understand that usually the first 5 waves coming off that, wave 2 or wave 4, especially wave 2, will be right around wave 1 where it ends. Coming off of wave 4, it can just extend on beyond wave 1, just because sometimes you have a really short wave 5, or, even just a regular wave 5, but you get your 5 waves up to it. But if you're coming out of your wave 2, usually your first 5 waves, your first subwave coming out of wave 2, so in wave 3 there, is going to end right around where wave 1 ended. Yeah. Let me see here. TLT, what's TLT doing? So these are your long-term government securities here. And so basically, I've got 5 down in a potential 1, 2, and then working on 3 here. And as far as 3 goes, this could be a 1, 2, 3, 4, 5. So this could be a leading diagonal that's going to end, again, right around wave 1 here, right? Look at where we are. Coming pretty close to that wave 1 there. So yeah, this could be a 1, 2, 3, 4, 5. So a leading diagonal is a subwave 1 of 3. And so what we would be looking for then generally is for price to kind of be around this pivot, maybe this HVN right here, a little bit below it there, depending on how high it gets up there on that pullback, and then continue up. But we'll have to see if we have a little bit more left in this to kind of reach that R1 pivot. But anyway, looking like might have marked a bottom there. We're going to continue to watch to see if it pulls up there. Mr. Nogo, what's up? He says, what do you think about the Fed hiding inflation by removing savings deposits from the M2 money supply? Well, I think the Fed's going to do whatever it needs to do to make you believe whatever it needs you to believe. As I've often said, everybody thinks that the Fed controls the market, that the Fed can make the market do something that it doesn't want to do, right? I don't buy that at all. The biggest thing the Fed has going for it is its mouth. Again, it's the idea that it's going to get up there and say things, and then people are going to do things based on what it says. And so if the Fed needs you out there taking out loans, spending money, all these things, it's going to tell you that the economy looks great, right? Or that it's looking better, or that it's looking good there. Or it's going to use, especially if it's not getting the power that it needs in its previous speeches, it's going to use words that are not as well defined, that are more vague. Transitory, is a good one that he used recently. And why they do that is because they can say, okay, well, rather than say, oh, these things are looking this way, they can say, oh, well, it looks transitory. And then it's left to you to decide what does transitory really mean in terms of what they're saying. And then if it results the way they were hoping it does, they can go back and say, see, we told you. But if it doesn't, they can go back and they go, well, that isn't what we meant when we said transitory. The way you took it is not the way we meant it. And so the Fed can always cover its rear end. But remember, the Fed's job, really, it's got the two things it does, And one of them is the unemployment, right? It wants to, it's got that employment mandate. Wants to, make sure that the unemployment stays low. But it can't just directly, legally, the Fed cannot just directly put money into the markets. Now, they found a way around that so far with what it's done here since the pandemic, which is create these other little go-betweens. And they give money there, and then that go-between gives it to another go-between who then gives it where it needs to go. I don't know that it's really all that legal, just based on, my law studies in law school. But nobody's really out there pushing the issue too much at the moment. But the Constitution keeps the Fed from putting money, directly into, people are like, well, why can't the Fed just send money to people, to the populace? Well, because it can't. It's against the law. But, that can always be changed by Congress. If Congress goes in there and votes that, hey, we can have them do that, then you can get UBI, universal basic income there via the Fed. But, even at the end of the day, guys, here's the thing. Most people get in there and they think, well, this is happening. So, because this is happening, then it necessarily means this is going to happen. So, stimulus checks, right? And they think, okay, oh man, $1,400 times, a few 10 million people, man, that's a lot of money coming in. People are going to spend it and the economy's going to go up and we're getting inflation. Well, no, just because the money goes to people doesn't mean that that's what's going to happen. A matter of fact, based on current sentiment, which you might be, amused to find is different than what you think based on stock market playing around or whatever. But a lot of people, first of all, with the $1,400, remember we talked about the fact that it was released under a different program than it was last time. So last time it couldn't be garnished or anything like that. This time, the way that they gave the $1,400 out there was under a different program, which allows garnishment. So if you're one of those people that were going to get that $1,400 or $2,800 or whatever for your family, and your wages are already being garnished for whatever, whether it's IRS or whatever else, your $1,400 is likely not going to get to you. It's going to go where the garnishment is going. So there's one way the money's not getting out there to you. Those that are getting it, again, we continue to see that savings rates are they're still just high. And people are continuing to save more. So it sits back in the bank and does nothing. So it doesn't matter that it was printed, sitting in the bank. A lot of people are paying down debt. We know that's happening. We can see that, in the government's numbers at the St. Louis Fed. So go to the Fed side. You can look at that up. And if they're taking that $1,400 and they're putting it toward debt they owe and they're paying that debt down. Remember, paying debt down is deflationary. You're destroying those dollars. You're sending that money back into the bank. The only way that money comes back out of the bank into, the general public is if somebody goes in and takes out a loan. But again, we know that overall loans are down and continuing to decrease. So, the odds of that happening are less. So just because there's $1,400 going to people doesn't mean it's going to have some great inflationary effect. So going back to your question there, hiding inflation by removing savings deposits from the M2 money supply. I mean, again, I haven't looked into them doing that or what the reason is for them doing that, what they say the reason is. But in general, anything the Fed is doing is because it needs you to believe a certain thing. It needs you to buy into what it's saying so you do what it needs you to do. And as long as you don't, the Fed's going to have to come up with new words. Because at the end of the day, the Fed just can't make the market do what it wants to do. If you don't believe what the Fed's saying and you don't go out there and take out more loans and stop paying down debt and stop saving and you just go out there and spend money, if you're not doing that, it doesn't matter how much money is printed by the Fed. So yeah. Let me see here. Good thing we don't destroy euros when we save. No, it's destruction. Yeah, it's destruction of your euro. If you're saving, that is a deflationary thing. Again, you're not, no, it's not destruction. You're saying savings, I'm sorry. Yeah. If you're saving, I mean, it's deflationary effect because that's money that just sits in the bank. It's not doing anything. But yeah. So yeah, if it's just sitting in the bank, it's not doing anything. So it does have a deflationary effect, sure. Now, does that mean it's going to be deflation overall? No, not overall. It depends on what else is happening. But anytime you save money, that is deflationary. You know, that I say it's deflationary. It doesn't mean there is deflation. What it means is it how else do I explain this? I think you guys get what I mean. If you're saving money, it's not that it doesn't mean that it's automatically that you're in deflation, but it has a negative effect on inflation. Yeah. So, but yeah. So anyway, that's that. I don't know if there's anything else to look at here. Let's look at Ethereum real quick. See where we're at with that. So, this is what I had last night. What do we got going on here? I mean, I guess I could see a possible 1, 2, 3, 4, 5. We've got a slightly higher high. This could be this could be 5 down here. 5 of 3. If it is, it's just got to stay above that pivot. Let's see here. Yeah, the pivot's 38 too. So, I mean, normally we would expect to bounce around here. And then continuation up here. So if we get that continued drop by Bitcoin, we should see the euro fall, or the Ethereum following. You can see that 61.8 is 22.70 here, right above the 1 hour R1 pivot here. So that's what I'd be looking at there. And that's 5 off this low here, which gives you a wave 1 off of what we have here. Now, overall, you've got this potential kind of channel thing going on here. And so we've got a preliminary, pattern target up here of around 25.75. So we'll see if we can get that to reach those kind of levels, or what's going to go on here overall. That gives you a 1-to-1 there. But locally here anyway, as long as Bitcoin continues lower, I believe Ethereum should continue on down. I think this updated count here would probably work out with Ethereum. There's always the other possibility here. Let me see. I'm just trying to see this one right here. This little wick kind of dips down into here. I was looking at this maybe like a 1, 2, 3, 4, 5 as an A, and then a B, and then a C. And then we get an A and a B and a C here. But I'm questionable because you've got this wick into this wick, which it might be okay. It's just that guideline. It's not really a solid rule, but it's a guideline. So I think maybe you could have ABC down, ABC up, and then, potentially working on, 1, 2, 3, 4, 5. So maybe a running flat type thing going on here. So then this becomes wave 4. Or, you get this ABC down for 4, and then you get a 1, 2, 3, 4, 5. So this is 1 of potentially 3. Or 1 of 5 of 3. So this would be 1, 2, 3, 4, 5 of 3. kind of moving up there. So it depends on what's going on right now here. If it continues lower, below the swing low, then we'll look for it to go to the pivot and we'll watch this kind of count. If it continues going up higher from here, and we look at this as maybe wave 1, wave 2, that would potentially give us a wave 3 up here of around 23.91, because this would be 1, 2, and then you get 3 to 23.26, and then 4 back to 22.20, and then 5 up here to around 23.91 here on Coinbase. But that would give you then your 3 would be up here as it finishes off there. In which case then your 4 on that would be your 38.2, which means you come on back down here toward this high volume node at the 21.12. And from there, look at that, almost at 25.63, almost right there, finding confluence with the target. So that might be what we're doing. So if we continue up here above the swing high, that might be what we're doing here. 1, 2, 3, 4, 5 up here toward that 2400 area. Pull back, and then a wave 5 up here to around 25.60, 70 minimum on that. So yeah. Hey, Crypto Girl, always good to have you checking in. Always glad, always glad. Thank you for being a part of that. What's going on, Tal? Oh, he said non-inflationary. I said it at the end. Yeah. Hank, QE has nothing to do with savings. I'm just mentioning that in QE here, if the money's going into savings, then it's not going to have that inflationary effect. The banks still do something with the money, sure. They're still getting involved with treasuries and whatnot. And loaning money out to the big hedge firms, hedge funds and financial institutions. But that's all upper levels. That has nothing to do with overall inflation and what's going on there. That's all that higher end stuff. That's a lot of swaps. Cash for treasuries, back to cash, back to treasuries, whatnot, between entities there. So yeah, that has nothing to do with QE. I was just saying with QE that we've gone on now, or with the stimulus plan, however you want to talk about. I was talking about the stimulus plan this time. But, if it doesn't matter how much money is printed or given out, if it just sits in the bank. It doesn't matter that the bank's using it to deal in high-end treasuries and stuff like that. It's not really coming out into the economy, really. It's just staying up in there, its own little box up there. So, yeah. Check. Send Adam a message, or you can send me a message, and I'll check up with things with you there as soon as we're done with the live stream here, man. Sure. Let me see here. Peter Brandt is back with his compound fulcrum on Twitter. This time for XRP. It's so funny about XRP. Everybody's freaking out when everybody started delisting it, and I said, listen. I said. Right now, I said it's kind of silly to be so, to assume what's going to happen. I said what'll probably happen, I said, is XRP will probably pop back up. And a lot of people are going to get left behind and wish they'd been a part of it. And that's when it was down at what? What was it, down there around, I don't even remember. Let me kind of pull it up here. Yeah, so that was back, well over here. And I said, don't put money into it that you're not going to, that you're going to be upset if you lose. Because, it is what it is. But I said, the odds are everybody's kind of jumping the gun here. There's been no ruling. And for some people, they're going to take a chance. They're going to buy low, and they're probably going to end up pretty well off because of it. Remember, I told you, I don't think there's going to be a huge fallout from the XRP thing, like everybody seemed to think they were. And so here we are now, popping up above $1. A lot of people are going to be salty about that. So, if you bought it that low when I was talking about it, potentially being a good place to buy, but, definitely not buying if you're going to be upset about losing it. Because, there are no guarantees. But it seemed like a good place to buy. So if you did that, congratulations. If you've held here, you've made a pretty good return. Potentially got a lot more coming in. If you sold because you got scared, that's understandable. Not knowing what's going on with with the economy and everything. So yeah, we'll see what happens now here. But it's hit our targets, which is great. We had some potential that it might go down, but always with the thought that if it popped up above here, it would continue higher. And then it did, because we were looking at a potential different triangle here. But it did continue going up. And so everything, we've always had those upper and lower targets as we continue to play it out. And overnight here, it kind of went above our target here. It went up to 1.09888. XRP, man, geez. I still remember buying that in 2017. God, we were way over here. I don't even know that they've got it on this chart here. This Kraken chart. I don't know, maybe. No, they don't. Oh, man, I bought it down there at 66/100ths of a cent, man. And then just held. Threw it there. I didn't sell at the top here. I think my average sell was right here about 260, 265, right around there. I didn't get the very top. But I bought it 0.66 cents, guys. I bought it 66/100ths of a cent. And pretty good little bit. So, you don't have to. I mean, even that was really close to a top. That's been my best trade so far. So far. That's a huge return. I don't even know what kind of what is that return there? Right around 2. We'll put 260 as low in there. Pretty close to it. Yeah, 261's fine. If we pull this down here to around 66/100ths of a cent. Yeah, right about there. That's a return of 38.2751. Am I at the right place? No, that's 6 cents. My bad. Sorry about that. Let me continue down here a little bit. 0.0066. Yeah, right about here. So there's the return. Yeah, 39,000%. That wasn't too bad. I mean, that was a span of what? It was just about a year or so. I didn't get the right one there. Yeah, I think I'd have to look at the Poloniex chart to find where it's that low. But yeah, that's pretty. That's his best trade. But you guys have to understand that was with patience. I held it for the year, and I didn't expect to get that kind of return. It just, I bought so low that I figured, hey, we kept working as it was going. I figured we'll just keep on, continuing to let it ride as long as it looks good. And it did. And finally, that end of 2017 and right into very beginning of January 2018 when alt stopped out, everything was topping out. I was like, man, I'm just getting out of here now. So worked out well. That was good. Hank says in XRP, he made his first crypto fortune, never touched it again. Yeah, I haven't traded XRP since then either. Yeah. I don't know. I'm not, it's funny because I'm not really one that believes in luck. As far as, bad luck and karma, I don't know. I just think it's that if you do things a certain way, it'll open your eyes to things that are happening. You just become more aware. But for whatever reason, man, I just don't touch it since then. Let me see here. Tell you, Ryder, no bad attempts at humor allowed here, man. Let me see here. What's been my worst trade? In what? In crypto? In stocks? Man, I got killed in stocks when I first started trading. Got killed lots of times. But I think I suffered the most humiliating losses there right prior to the dot-com bubble there. That was my first real time in the markets experience a bubble burst. So that was pretty bad. It was a lot of trades in there. It was, lost a lot of money, a lot of stuff. But it woke me up, and in 2008, I was ready for that. So I was ready for 2008. That worked out fine. Things have been fine running into 2020, 2021. Looking for a macro top now. We'll see if it plays out. But yeah. Let me see here. Let me see here. I don't know. I don't really have a trade that haunts me or anything. I think that's what Hank is asking right now. I don't know. I tend to. I don't know. I guess when you're in it, and you become successful after a while, you don't see your losses as anything really end of your lifetime thing. If you're trading correctly, you don't have any real big ones, and you can look back on some of the ones you lost on, but I can say I'm glad I wasn't in that I wasn't writing Sailor's Company up there at the top of the dot-com bubble, because I was holding on as everything collapsed, like y'all probably did, the first bubble that you've been in, and his dropped almost 100%, like 99% or something. That would have just, I don't know. I don't know if I would have stayed in if that happened. Sure I would have. Sure I wouldn't. But yeah, I don't know. I don't really think about the losses. I know it's weird. I don't really think about the losses anymore. I've just become so accustomed to just thinking about losses as just, next step on to the next move up. I'm trying to think if there's anything that really stood out though. Oh man. I wasn't trading Forex at the time of when Soros made his billions, broke the Bank of England there. I wasn't trading Forex back then. I didn't start trading Forex till, what about 2004 or something, 2003 maybe, somewhere right around there. Before that, it was just equities. And then, of course, added on crypto there, 2017, January 2017. Yeah. I'm going to have to think about that. I'm going to have to think about something really. It's nothing. No one trade is really coming in as this oh my god moment. But I mean, just the overall losses with that with the tech bubble. Overall, everything I had just went down. Yeah. And after it went up so far, and I should have taken profits. I mean, that's probably the worst part of it. Just not knowing at that time, still being kind of new. And what's funny is, again, I've talked to you guys about, losing a lot of money. And so, I've lost, ridiculous amounts of money, in the beginning. But it was like probably around, I think I got tired of losing, probably around 99 or so. And that's when I really decided to start kind of really, so that was 4 years after I started. And that's when I decided to really kind of learn, to become just a student of the markets, learn about as much of it as I could. Which is why I did well getting in on the stuff that was spiking there, leading into the dot-com bubble. But having never been through a real bubble before, even the stuff I learned kind of got emotionally pushed to the wayside. Oh, man, it's crazy. But since then, life's been good. So I can't really complain. But note what I said there, guys. You know, it took me 4 years of consistent losing before I finally said, you know what, I'm tired of losing. I need to learn what the heck's going on with the market. You know, be serious about it. I kind of half-assed it along the way. Like I'm sure all of y'all have, right? But notice, 4 years, guys, it didn't happen overnight. And then it took me another couple of years and a loss in the huge .com thing before I really kind of not only continued learning, but really took to heart the things I was learning. You know, you guys have often heard me say, I kind of put what I do here is I can lead a horse to water, but I can't make them drink, right? And that's because that's what I went through. I learned all these things, but I kind of half-ass employed them, didn't really give them a whole lot of thought. I kind of thought, yeah, and kind of went on with it. So, I mean, ultimately, it was about maybe 7 years before I started, 7 to 8 years before I started becoming consistently profitable. Which is why, risk management is one of the things that's one of the, the things I preach so much here, because at the time it was one of the things that I didn't pay a whole bunch of attention to. And that's why when I say, I know it's not the fun stuff, it's not the flashy stuff, it's boring, you don't want to do it. Because I remember I was there. And it cost me a lot of money not doing it. But that's why I'm constantly talking about it now. Because that is one of the biggest lessons I've ever learned. So if you're new to trading, guys, I'm going to sit here and say these things, and most of what I say, you're probably just going to be like, yeah, right. Or you might get excited at first and then just kind of go on with your life afterward. I get that. But the longer you ignore these things I'm saying, the more money you're going to lose overall. And it's just, again, I've been there, I've done that. So, yeah. Let me see here. Mr. No-Go says, this is my first bubble. I feel like I've entered it just before it's about to pop. Are you talking about everything, like stocks and everything? Are you talking about crypto? What kind of bubble are you talking about? Because, here's the thing, guys, and this is the hardest thing, I think, one of the harder things for new traders to learn, is that, when you're talking about macro reversals, especially when you're talking about very large ones. So again, I'm talking about a 90, 100-year bubble here. It's going to take a while to play out. So it's okay to continue to trade along along the way. As long as the trend continues up, it's okay to keep trading up. The bubble may not end tomorrow. It may end next year. And you don't want to miss all those opportunities to trade. So, a lot of people think they're all smart online. They're like, oh, you were talking about this last year, and look, it's just gone up. Yeah, we've got the macro idea, and the bubble has to play out. And it's looked like it was closer to reversal at other times, sure. But at the end of the day, we're still trading in the direction of the trend. And if you don't believe me, you can ask anybody in TWC. We've made some really stupid, amazing calls. I say stupid as in good, as in just ridiculous calls. Consistently for the last year. Naked was one of the best of them, NAKD. I think we were looking at getting into it around 7 cents. And look at what the chart's done, guys. We've got so many other ones in there too, not just with stocks, but with crypto and everything else. And so, gold went a little bit higher than I initially thought, but since it's made that top, and we've been talking about that top, it's continued down well. So yeah, you're gonna have those your big macro thoughts. But just understand that depending on what type of bubble it is and where it's at, I mean, it could still take a little bit to play out. There's no reason to be so scared to be in the market. As long as you're using proper risk management, there's nothing to fear about being in the market, guys. The thing is, you have to learn what proper risk management is. We teach that. And it's important, especially if you're brand new, to stick with it, because at the end of the day, guys, if you're brand new, the goal is to stay liquid while you're learning. Most traders don't, and that's why they're out within 3 months, lose everything. But, again, If you understand that risk management is the most important thing that you're going to learn and you're going to do every day as a trader, if you take it that seriously and then you go and learn about it and then you apply it consistently, you should be able to protect yourself. You'll definitely stay in the market a lot longer than all of the other new traders. And the reason that's such a good thing is because the reality of it is, guys, it's not good enough just to be in a market. If you're trading inconsistently, if you're trading poorly for 3 years or 5 years, don't tell me you're experienced in the market. You're experienced in giving the market money. That's what you're experienced in. What you need to be is experienced in the market as in you've become consistently profitable. And that's not just over a week or over a month. It's at the end of a year or 2 years that you're consistently profitable. Doesn't mean you're going to win every trade. You might only win half or less. But the idea is that your profit continually outweighs the losses. And you can only do that with proper risk management. As far as crypto goes, it's possible. We looked at a couple of possibilities of what's going on right now. You have your talking heads all over social media that says, crypto, Bitcoin's going to be worth 400,000 by the end of the year. I can't say it won't. I can't guarantee you it won't. But I think if anything by the end of the year, I think maybe 90 or 100 would be closer. But that's only if some other things aren't happening right now. And if the dollar is continuing to rise, it's gonna act as a strong suppressant on Bitcoin price. Because as the dollar becomes more valuable than things that are denominated in dollars, you're going to get that downward price pressure. It's going to cost less dollars to buy those things. Right? So, I think a lot of what's going on with Bitcoin is going to be dependent on what goes on with the dollar. If the dollar goes down, Bitcoin's got a free ride up. If the dollar continues going up, I'm not saying that Bitcoin can't rise, but it's going to be a heck of a lot more difficult than it was. But again, it's not just that. It's this whole idea, guys. You're looking at these big institutions to come in and save you. You look at the big institutions come in and put in all this money so price goes up, right? And generate all this excitement, right? The problem is these big institutions, Bitcoin is a part of their overall portfolio. And if the value of the dollar is rising, then they don't have much incentive to keep their wealth or their company's treasury in Bitcoin because they're going to lose value. And there's no guarantee price is going to continue up. And I know some of you guys, you sit here, you go, yeah, I've got my $100 or my $1,000 in there, and I'm just going to ride it out if it goes down to $3,000 or whatever. Well, that's great for $100 or $1,000 or something. It's not so great for 100 million, 50 million, 500 million, a billion. That's a much bigger thing. And then, as companies, they have other obligations to shareholders. So they can't just do that. So, do I hope it goes up? Sure. I mean, again, I've still got Bitcoin that I bought in 2017 in January that I don't touch. So that was around $1,100 at the time, I think. And that's just sitting there. So if price continues to go up, that continues to go up, right? But I'm not going to sit here and just blindly go, yeah, it's definitely going up. There's a lot of people out there that say, oh, Bitcoin's going to do this and it's going to do that. No, it has the possibility of doing that. And we hope that it may get to that point. But this nonsense that's being spoon-fed to y'all about all these guarantees about what Bitcoin's doing or what it's going to do, it's just nonsense, guys. And it's following nonsense like that will make you poor. Because if they're incorrect, you haven't protected yourself in any way that they might be incorrect. You just bought into the narrative. You bought into the hype. You bought into the excitement and the euphoria and the emotion. Didn't prepare for anything, do anything else. And that's where the issues come in. So you guys want to be careful with that. All right, guys? That's all it's ever been when I talk to y'all about this. That's all it's ever been. It's been about, listen, I'm not here to change your mind. I'm here to give you my thoughts, but more important than my thoughts about what may be going on is risk management and the importance of it. And the importance of recognizing when you are emotionally into something where it's emotionally bearish or emotionally bullish. And recognizing that and being able to then step away and protect yourself against yourself. All right? You guys want to make sure that you want to be around here for a while. Trading's a lot of fun, guys. It really is. When you finally figure it out and you get consistent with it, it's a lot of fun. It allows you freedom. It provides you money. You know, it allows you to do things that you want to do otherwise. But you have to pay attention to what's going on within you as you're learning about it. Otherwise, you're not going to be able to be liquid enough for long enough to recognize all that potential gains that you could be having. So yeah. Well, Mr. Nogo, I appreciate that, buddy. Hope you come back, man. Let me see here. But yeah, you know, so we'll see. Tail says, I don't lose money, but I do not make money, so I stay in fiat. So I think, yeah, you know, it just is what it is, guys. You know, as long as you don't get too full of yourself. You know, I've got my opinions of things based on my experiences, based on, you know, 25, 26 years of trading, multiple markets, going through multiple bear markets and you know, across these ones, based on my education. You know, I do have a pretty extensive and varied education, graduate level education. You know, so I use all those things to kind of figure out what I'm thinking may be happening. But there's never any guarantee, guys. Never any guarantee. No matter what I say or anybody else says, no matter what the Fed says. You know, we're all just trying to figure it out the best we can and make money along the way. That's why it's so important to wait for to not just get in just because there's a chance, but then to wait for the opportunities that make sense. The ones that have a greater chance of actually playing out. Those are what you want to wait for. Those are the trades you want to make. It means you'll lose less money because you'll be in the market, you know, many less times. So you won't be taking all those just because, or they look like they might have a chance entries, which most of the time end up losing money. And when you are entering, you're entering on something that has a lot greater chance of actually being successful. So you're not only are you reducing the amount of money you lose over time, but the trades that you do take are much more likely to be successful for you. So those higher confidence trades, that's what you need to be looking for. Jordan says his opinion is that if markets don't roll over by around May, this rally goes until fall, and we get the 37 to 40 Dow Jones. You know, anything's at this point, you know, I can't say that wouldn't happen. I cannot say that wouldn't happen. So we'll have to see how things are playing out right now. You know, many of the things that are going on are at their extremes. So, you know, we'll see how much more it takes to finally break it. But once it does, I mean, we got Archegos there who, you know, $110 billion lost. They were, I mean, it was the leverage, man. And Credit Suisse, from what I'm understanding right now, as of Monday, was still unwinding positions. I mean, is that the beginning of the end? It's possible. That's a lot of money, a lot of leverage. Primary dealers, you know, just railed themselves with that. You know, they got so greedy with the fees they were getting by offering this specific type of leverage, basically, that they were offering. Their Archegos could go so big. And now they got caught holding the bag, basically. I mean, they've got to now, you know, take some serious losses. It could be the start. You know, this whole thing could be the start of an unwinding. We'll see. We'll see. And, of course, you had Melvin there, Melvin Capital, which got nailed with GME, you know. So, I mean, you know, there's a lot of significant things happening right now. So we'll see if we can get that, you know, we'll see if that really just kind of says that's it, or if the market can recover off that and continue up. Sure. Anyway, guys, hey, listen, I got to get out of here. I'm running late again. I really appreciate you guys checking in. As always, you can join us here at howtotradetowin.com. Tier 3 is the place to be. We'd love to have you there. But if not, follow me on TX West Capital on Twitter. I don't tweet a whole lot. I'm not there all day because I'm pretty much all day working with our members in TWC, providing charts, answering questions, critiquing, helping them out and stuff like that. But when I do post something on Twitter, it's usually of significance. I don't think you'll ever really see, here's what I'm having for breakfast type things. But yeah, be there. So follow me there. Join us at howtotradetowin.com. And, other than that, guys, if you don't do that, hey, join us back here at Friday, 11 a.m. Central Standard Time. We'd love to have you here, all right? So you guys have a great week of trading. Stay safe. Remember, don't take a trade just because. Look for the higher confidence trades. Beyond that, the only thing that you control is how much you lose, right? Remember that, guys. The only thing you control is how much you lose. Have a great weekend. Take care.